What is happening with Ondas Inc., ticker ONDS, and why is the stock getting so much attention right now? On Friday, August 21st, 2026, Ondas shares were trading higher, gaining roughly 4.7%. But the bigger story is not simply the one-day move. Investors and traders are watching Ondas because the company has reported a dramatic acceleration in revenue, expanded its backlog, raised its full-year outlook, and added several major defense and industrial capabilities through acquisitions and new contracts. So, is ONDS becoming a serious autonomous technology and defense growth story? Or has the stock already moved too far too quickly? Let's break down what is driving the momentum. The biggest headline from Ondas's latest results is its second quarter 2026 revenue. The company generated approximately $83.8 million during the quarter. That represents a 67% increase compared with the previous quarter, and more than a 13-fold increase from the same period last year. That is an extremely aggressive growth rate. For traders, the significance goes beyond the headline revenue number. A company growing this quickly can attract an entirely different type of market attention. Instead of being valued primarily on future potential, investors can begin focusing on actual sales, contracts, backlog, and the company's ability to convert that business into sustainable profits. Ondas also responded to the strong performance by increasing its full-year 2026 revenue guidance. Management now expects revenue in the range of $525 million to $550 million. That is a major increase in expectations and gives the market a much clearer picture of where management believes the business is heading. However, there is an important part of the story that investors should not ignore. Ondas is still operating at a loss. Second quarter earnings per share came in at negative 19 cents, compared with a loss of 8 cents per share in the year-ago period. So while revenue is accelerating rapidly, profitability has not yet caught up with that growth. That means ONDS remains a growth and execution story. The question for investors is no longer simply whether Ondas can generate revenue. The bigger question is whether the company can scale these businesses efficiently enough to eventually produce meaningful earnings and cash flow. The balance sheet provides another important piece of the story. Ondas reported approximately $1.4 billion in cash and short-term investments, while carrying very little net debt. That gives the company substantial financial resources as it continues expanding its operations and pursuing acquisitions. For traders, this shifts the focus. The immediate concern is less about whether the company has enough liquidity to continue operating, and more about what management does with those resources. Can Ondas successfully integrate its acquisitions? Can it deliver on the contracts already secured? Can it turn its rapidly expanding backlog into revenue and eventually into profits? Those are the questions that could determine where ONDS goes next. And then there is the backlog. During the second quarter, Ondas secured approximately $175 million in new orders. Then, early in the third quarter, the company added another $105 million in orders. Together, those developments helped push the company's pro forma backlog to approximately $757 million. That figure is important because it gives investors something more tangible than a simple growth narrative. A large backlog represents future business that has already been booked or identified across Ondas's various platforms and acquisitions. It includes contributions from businesses such as Design and Cyberhawk, along with Ondas's existing operations. Of course, a backlog does not automatically become revenue or profit overnight. Contracts still have to be executed, products have to be delivered, projects have to remain on schedule, and customers have to follow through. But compared with a company that is relying almost entirely on unproven future opportunities, Ondas now has a much larger pipeline of business to work with. Another major development is the completion of Ondas's Cyberhawk acquisition. Cyberhawk brings AI-powered drone inspection technology and visual asset intelligence into the Ondas portfolio. This is strategically important because it expands the company's exposure beyond defense and into critical infrastructure, energy, industrial assets, and inspection services. The idea is relatively straightforward. Instead of simply using drones to fly around an asset and collect images, AI can help process that information, identify potential problems, and turn visual data into useful intelligence. That creates opportunities for a more technology-driven business model, potentially including software and data services alongside the physical drone systems. And that matters because recurring software and data revenue can eventually provide different economics compared with one-time hardware sales. Ondas is also making aggressive moves within the defense market. The company secured a strategic tender from the Israeli Ministry of Defense connected to its digital BAT program. The opportunity places Ondas in a prime contractor role involving next-generation, lower-cost tactical attack drones. This is significant because defense spending on autonomous systems has become an increasingly important theme. Modern militaries are looking for systems that can be deployed at scale, operate with greater autonomy, and potentially perform missions at a lower cost than traditional platforms. Ondas is attempting to position itself directly in that market. The company has also announced plans to acquire Aran Defense for approximately $33 million. That transaction would add Israeli engineering and manufacturing capabilities to Ondas' defense operations and could strengthen the company's ability to support future autonomous drone programs. So when you put the pieces together, Ondas is not simply developing one drone product. It is building a broader platform around autonomous systems, defense technology, AI-driven inspection, industrial intelligence, and manufacturing. That diversification could become one of the company's biggest strengths if management executes properly. There is also a broader industry trend working in Ondas's favor. Governments and companies are increasingly interested in reducing dependence on foreign drone supply chains. At the same time, tariffs and geopolitical tensions are encouraging more domestic and allied production. That could create additional opportunities for companies positioned to manufacture and deploy autonomous drone technology in the United States and allied markets. Still, investors need to be careful about assuming that every industry tailwind automatically becomes revenue for ONDS. Competition remains intense, government contracts can take time to develop, and defense programs can be delayed or changed. This is where the analyst community becomes relevant. Several Wall Street firms have responded positively to the company's recent developments. Oppenheimer raised its price target on ONDS from $16 to $18 while maintaining an outperform rating following the company's second quarter results. Ladenburg also increased its target, moving it from $21.50 to $22.75. Roth Capital has maintained a positive view as well, with a buy rating and a price target around $13, particularly following the Aran Defense announcement and the expansion of Ondas' autonomous defense strategy. Higher analyst targets can provide additional momentum when a stock is already attracting traders, but they should not be treated as guarantees. Ultimately, the market will decide how much value it wants to place on Ondas based on future execution. And that brings us to the stock itself. Ondas has been moving higher from its July levels. After trading around the $7 area in late July, the stock pushed toward the upper $8 range by August 21st. Recent trading action has also shown periods of relatively tight consolidation. For active traders, that can be an interesting setup because a stock that consolidates after a strong move can potentially make another large move if a fresh catalyst arrives. And Ondas has no shortage of potential catalysts. Another government contract, an acquisition update, stronger revenue numbers, improved guidance, or another analyst revision could all influence the stock. But the opposite is also true. If the company misses expectations, experiences integration problems, delays projects, or fails to convert its backlog into revenue at the expected pace, the stock could face significant selling pressure. This is especially important because ONDS has already attracted momentum traders. Momentum can work in both directions. When expectations rise rapidly, even a company that reports good results can see its stock fall if investors believe those results were already priced into the shares. That makes expectations just as important as the actual numbers. The larger investment thesis around Ondas can essentially be divided into three major themes. The first is autonomous defense. The company is attempting to establish itself as a supplier of increasingly sophisticated autonomous drone systems for military applications. The second is AI-powered industrial intelligence. Through Cyberhawk and related technologies, Ondas is expanding into drone inspection, infrastructure monitoring, and data-driven asset management. And the third is the reshoring of drone manufacturing. As governments and businesses place greater importance on secure and locally controlled supply chains, Companies operating in the United States and allied markets could potentially benefit. If these three themes continue developing at the same time, Ondas could have multiple avenues for future growth. But the risks are just as important. The company is still losing money. It is spending heavily while expanding through acquisitions and building its technology platforms. Cyberhawk and Aran Defense can potentially strengthen the business, but acquisitions also introduce integration risk. Management has to combine employees, technology, customers, operations, and financial structures without losing momentum. There is also execution risk surrounding the company's defense contracts. Winning a contract is one thing. Delivering products on schedule, meeting technical requirements, scaling production, and generating attractive margins is another. For ONDS investors, that distinction could become extremely important over the next several quarters. The company has indicated that it is targeting platform-level break-even toward the end of 2026 and company-wide break-even around the end of 2027. If Ondas can continue growing revenue while gradually improving margins and controlling expenses, the market could begin viewing the company very differently. But if revenue growth comes with continuously expanding losses and cash consumption, investors may become more cautious. So where does that leave ONDS right now? The company has a record quarterly revenue figure, a significantly higher full-year outlook, approximately $757 million in pro forma backlog, major defense opportunities, the completed Cyberhawk acquisition, and a planned Aran Defense acquisition. Those are meaningful developments. At the same time, the stock is no longer trading like an unknown company with only a future concept. Expectations are rising, and that means execution has become the central issue. For traders watching ONDS, the most important things to monitor are revenue growth, backlog conversion, new contract announcements, acquisition integration, cash usage, margins, and management's progress toward break-even. Technically, the stock's behavior around the high $8 range will also be worth watching. Continued consolidation followed by strong volume and a new catalyst could attract additional momentum traders. But a breakdown accompanied by heavy selling could tell a very different story. The key takeaway is that Ondas has moved from being primarily a speculative autonomous drone story toward a company with increasingly significant reported revenue and contracted business behind it. Whether that transformation ultimately produces a profitable and durable company remains to be proven. For now, the market has clearly taken notice. Record Q2 revenue, raised guidance, a growing backlog, defense contracts, AI-powered drone inspection, and new manufacturing capabilities have created a powerful combination of catalysts. But investors should remember that rapid growth often comes with rapid expectations. The next stage of the ONDS story will depend on execution. Can Ondas turn its backlog into actual revenue? Can it integrate Cyberhawk and Aran Defense effectively? Can it scale its autonomous defense operations? And most importantly, can all of that growth eventually translate into sustainable profitability? Those are the questions that could determine whether this recent momentum becomes the beginning of a much larger move or simply another volatile chapter in the stock's history. This video was intended for educational and informational purposes only. It is not financial advice. Always conduct your own research, understand the risks, and consider your personal financial situation before making any investment decision.